Good morning. You are listening to a brand. If it's hamburgers, it's McDonald's. If it's iPhones, it's Apple. And if it's investing, it's Everything Money. All right, what do we got this morning? Big morning of jobless claims have dropped. America's back, baby. Except for all of those jobless claims that were not filed. People probably are not filing them and collecting money and not doing anything. So that number means nothing, in my opinion. But what does my opinion matter? Futures are down on that. It's funny. When you see good numbers, here we go. Where are we? Pandemic era low. So when you see numbers like this, basically what that tells me is we are going to see less stimulus. That's basically what it comes down to. So good means bad, bad means good in today's day and age. Let's start with some stuff to talk about. Then I want to get into a lot of your guys' trades today. I would like to do a little bit more than 15 minutes of your trades. We'll see. Let's start with Southwest. So Southwest reported yesterday. So they had $75 million was the cost of their mishap that they had last week or 2 weeks ago, whatever it was. It was October 8th through 13th. So yeah, call it 2 weeks ago. It was, remember the company said it was COVID. I'm sorry. The unions and the workers said it was COVID. They didn't want to get the vaccine. They didn't want to be told to get the vaccine. The company said it was weather related and FAA control related. FAA came out and said, we didn't do anything. Everything's perfect on our end. So it was pretty funny, little discrepancy going on there. But that's a moot point. 2,000 things were canceled. Airlines reported a third quarter profit of $446 million on Thursday, thanks to a boost from federal aid and voluntary leaves of absence by employees. But it said shortage in staff led to operational issues that could hurt the bottom line. So, hey, we'll see. The good news is airlines are coming back. I mean, I've gone to the airport probably 10 times since COVID. Oh, that's not true. 20 times since COVID. And I've progressively seen each month that we're getting more and more people in the airports. I'll tell you what, Airports are back, baby. That's what I know. All right, let's see. Next year will be tricky for stockholders, so follow this roadmap, says RBC's top strategist, Lori Casanova. Let's see here. The list of worries is long. Supply chain issues from economies and companies, hawkish central banks. Hawkish central banks is a big issue. I'm flying Southwest today. Wish me luck. Good luck to you, sir. COVID-19 threats coming back in some parts of the world, and Evergrande. I don't believe that one, and I've explained that several times. The bones of the economy for next year are very good. Sure, whatever you say, Lori. She sees the first half of the year as still reopening with COVID fading into the background and the economy benefiting from that. While companies complain about supply chain woes, they also say that demand is still very strong. That is absolutely true. Very, very strong. Guys, smash the like button for me. Let's get this thing big this morning. By the time we get to the middle of the year, 2022, of course, that will probably have run its course, and we'll be talking more about shifting back into growth and larger cap and technology and secondary growers. So basically what she's saying is now you should move out of these tech companies and this and that, even though they're going to all-time highs, which that doesn't really make any sense. By that time, Wall Street will start thinking, what will the economy look like in 2023? When we start getting into 2023, we're going to start talking about Fed interest rate hikes. Now, I have another story that combats that, and it's from somebody that works in the Fed. So she makes a couple of good points. I like pulling out these opinion pieces each morning just to see what everybody has to say. Everybody has a different way of thinking, which just proves that who knows who's right, who knows who's wrong. So even the people that are kind of controlling things, for lack of a better word, don't know what's happening. So here's this. Fed officials say lingering inflation could change the interest rate outlook. This is Randall Quarles. I can't remember what state he's from, but a top Fed official warned that extended high inflation through next spring could force central banks to consider raising interest rates sooner than anticipated. Fed Governor Randall Quarles said on Wednesday that he still expects higher prices to ease next year's bottleneck and supply chain issues. Basically, somebody made a good point the other day. Who was the guy? I read a story, I think it was on Monday. Oh, it was an opinion piece from MarketWatch. I can't remember the author's name, but he basically said, anything that you're doing with supply chain issues, this and that, what is that going to do for the production of anything that you do with interest rates, printing money, quantitative easing, whatever you do, one way or the other, how is that going to fix the supply chain issues? It's a very valid point. He went on to say that the flip side of that dilemma is transitory does not necessarily mean short-lived. It just means, well, transitory. I have no idea. I'm still waiting for somebody to define transitory for me. We can tolerate, if you will, an extended period of time of 2.5% inflation, much longer than we can an extended period of 4% inflation. If we are still seeing 4% inflation next spring, then I think we might have to reassess the speed at which we would be thinking about raising the interest rates. And frankly, I don't necessarily see inflation coming down by next spring. Nothing points to that. As a matter of fact, it points to it going up. All we did with last week was hear about the issues that could be happening with oil going forward. You start having oil issues, it just trickles down in everything else. So I see inflation continuing to climb or maybe stabilizing, but I don't see it going down. Paul Tudor Jones says inflation could be worse than feared, biggest threat to our markets and society. I highlighted a lot in this article. It was a very good article, mostly because it was all just pull quotes. Billionaire hedge fund manager Paul Tudor Jones believes that inflation is here to stay, posing a major threat on the U.S. markets and economy. I think to me that the number one issue facing Main Street investors is inflation, and it's pretty clear that inflation is not transitory. It's probably the single biggest threat to certainly financial markets, and to society in general. To rescue the economy from COVID-19, listen to these numbers. The Fed has added more than $4 trillion to his balance sheet through its open-ended quantitative easing program. That's just QE. While the U.S. government has unleashed over $5 trillion in fiscal stimulus. Between what Trump did and what the Biden administration did this year, it's at $12.3 trillion if you date it back to March, April of 2020. If you all you do have to do is just go back and look at the CARES Act and add them all together, and there you go. There's 12.3 trillion. Inflation can be much worse than we fear. We have the demand side of the equation that is 3.5 trillion greater than what is normally would have, just sitting in liquid deposits. So people have dry powder, but are they gonna get rid of their? Are they gonna use their dry powder? That's the real question. I don't know. I don't know. It's time to double down on inflation hedges, including commodities and treasury inflation protected securities, and that is what investors should avoid fixed income in this inflationary and low environment. You don't want to own fixed income. That's what he said. The S&P this year, it's amazing. Everything is terrible except the market. The S&P is up about 20% this year, about 1% away from its all-time highs, and I think it's about 0.2% away from its all-time highs, just to be a little bit nitpicky. It's cray. I'll talk about my girl, Sarah Blakely. She's great. This is a great article. The only reason I pulled this up, if you guys haven't listened to the podcast, it's called How I Built This. It's an NPR podcast, and it is on, I guess anywhere where you listen to podcasts. I don't know, but it's on Apple Podcasts. And there's, if you search her story is just incredible. I mean, she came in and she didn't tell anybody except for her husband about her idea of Spanx, because she didn't want people to tell her that's a terrible idea. Don't go do that. She didn't want that in her head. So she just kept going, and she started pitching. I think her first deal was with Saks or Nordstrom. I can't remember. And she went in there and she modeled the clothes herself on her own body, and she pitched it, and it just started snowballing and snowballing and snowballing. People, and then when it came out that she had this business, people were like, "Wait, you have a business? You didn't tell anybody about it." The company's now under a deal to be bought with Blackstone at a valuation of $1.2 billion. She's going to continue overseeing all operations, and she's going to be the executive chairperson. And yeah, it's incredible. That's a really good story. If you guys want to go and read that, it's cool. I wish I could be a cross-dresser just so I could support Spanx, but unfortunately, I'm not going to cross-dress. AT&T sees subscriber gains as earnings top expectation. So AT&T, this gives me a lot of confidence about going into. Andrew Wolf just said, "I bought Spanx for my wife on one Christmas. Huge mistake." Yep, that's exactly right. Seth said Nordstrom stood next to her product for 2 years to sell it in stores. And you know what the incredible thing is also? She did not do any mass advertising for a very, very long period of time. I think just in 2018, she started doing mass advertising. Other than that, it was just word of mouth. Really an incredible business. Really incredible business. So if you want a story about business, go do it on there. If you have a masterclass subscription, there's a masterclass on there about like how to start a business, and she's the one that does it. She's good, but go listen to that podcast. Really good. AT&T continues to see stronger subscriber additions in wireless business, which is great because they're starting to get rid of all this other crap. Its revenue declined a little bit, which the company said reflected its spinoff of U.S. video service business as well as lower businesses. Of course, remember they did what's that company? Somebody help me out here. Discovery. Revenue for AT&T's communications unit increased 28.2 billion from 27.2. This is great. This is what I like seeing them doing. I want them to be a communications business. Go back to what worked for you for a very long time. They did so much with terrible acquisitions, and they're finally starting to do the right thing. Cut debt, cut the dividend, buy back shares, focus on what's good for you, and they will be fine. I'm telling you, AT&T is a good company. They just stretched themselves way too thin. They saw 1.22 million net additions, including 928,000 postpaid phones. Warner Media business saw revenue grow to 8.4 billion from 7.4 billion. I mean, they're doing all the right things right now. They're doing all the right things. They just got to keep doing it. Don't get distracted and keep doing it. Tesla. Interesting here. Tesla's third quarter numbers, it's a beat. I love that this happened. I heard it on the golf course yesterday, and I was so happy about it. They beat on both top and bottom lines, and the company's stock dropped 1.5% after hours. Not a big deal, but the point is, this is why I don't like trading earnings. Tesla beat top and bottom and went down after hours. Earnings is a total crapshoot when it comes to price. Total crapshoot. I don't know what they're doing right now, but the point is, I just want to say this is why I don't trade earnings, because you can come and crush, and you're gonna get smoked, or you can come and do terrible, and you'll be rewarded by stock price. Just this is why I don't do it. The company reported $1.62 billion in net income for the quarter. Second time it has surpassed $1 billion. A variety of challenges. Of course, they have semiconductor issues. They are set to go forward and achieve 50% annual growth on vehicle deliveries. They delivered 241,300 vehicles in the quarter. They have not yet been doing the truck. They said they're going to wait until Texas now. Wait until their thing in Texas happens. Hold on one second. Okay. So Tesla had $12.06 billion of revenue coming from cars. That's 87.6% of their revenue coming from cars, but they're a tech company. Mic drop. Follow us on Instagram at TraderMo_EM, at Paul Gabriel. Make sure you spell his last name right, and at Seth Kirchanen. You might want to screenshot that one. That one's KERECHANIN. That's that. Let's go here. Let's see what we got. Yields sticking the same, 1.65%. Creeping, baby. They're creeping. After the bell today is Intel and Snapchat. I don't know how many of you own Snapchat, but Chipotle reports later after the bell. That's cool. And then if you want to join us, this is our new homepage. Actually, I pulled a lot of news from our homepage today. That was great. And here it is. $28 a month gets you into our software and into our community, and more importantly, the software. The software is just incredible, because if you go back here, this is all the software that you get. 8-pillar analysis, retirement calculator, stock analyzer tool, 8 pillars portfolio. Exclusive content is already coming out, and we're sending that to you daily on Discord. Real estate calculator is getting there. Momentum trading I'm working on daily. I really focus on it at the end of this month. I mean, this is really coming along, and if you want to join, it's definitely worth the value. $78 a month gets you into the Bid and Ask Nation. Somebody asked the question before we got started, and it said, and they said, where do I go to find videos of trading? Bid and Ask Nation. You get all of my videos, Trading 101 series, all the seminars I've done. I'm going to do a seminar just after October 31st. Yeah, that's where you come for it. And of course, you get the Employed Trader series, and it's looking. I mean, you guys know that are in the Bid and Ask. You know we're coming close to a few trades here, and I'm finally getting excited because it's been a boring market out there. But it looks like a few are coming in. If you want to join Paul's Super Shorts, $500 a month gets you that. If you want to do a one-on-one trading session with me, I actually have one tomorrow after book club. $750, 1 hour trading session with me. Talk about anything you want, but I love to focus on trading, and bring any questions you have, and we can talk about it for 1 hour. And if you want to do a real estate deal with Paul, if you're doing a deal in this kind of market, don't end up like China, Evergrande, and screw the pooch. Just talk to Paul. All right, let's see. Let's see. You guys send me some stocks. I'm going to start ripping through here. I'm not ready yet, but I just had to join at $78 a month. Lost Islander. You make a good point here. Let me piggyback off that. So Everything Money is a teaching platform. We're not like these other dorks out there that are telling you buy this, buy this. I don't care what you buy. We're teaching you a process from a value perspective, from a trading perspective, from a retirement building wealth perspective, from everything perspective. We are teaching you what to do. So I'm not trying to get your $78 to just jump in there and I'm going to tell you what to trade. I want you guys to be able to, my goal in the Employed Trader series is before I put the video out or before I put the text out that says what we're going to do that day, I want you to be able to say, this is what we're going to do. I want to build it so that we can talk about trading, but I want you guys to be able to do it before, because that's the goal here, not just following blindly. So this is a teaching platform. All of this is just a teaching platform. So Tesla said that I'm not reading it. Tesla said that my car is going to come November 27th through the 29th. Let's see here. Dun, 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 dun. What else do we have? All right, let me do some stocks. MU, I know somebody asked about that. MU. NetGhost, tell me what stock you want. I know you said it earlier today. Somebody asked, has this one bottomed out? You know, I don't necessarily know, because this would have been my bottoming out, I would have thought, right there. But it actually broke below it. So this is a hard one for me. I mean, you are getting some massive selling volume, and you have been since mid-April. I don't know if you're necessarily done with this one on the short side. So, did you get the McDonald's job? You know, I said, if you can't get a job in America today, you're unemployable. I applied at McDonald's. They didn't hire me. I'm unemployable. So, shoot. TSM. Oh, DWAC first. DWAC. Otherwise, I will forget. Digital World Acquisition Corp. NetGhost, what the hell is this? What is this? Bro, I have no idea. I don't know what to tell you right now. What is it, TSM? All right. I will give you the benefit of the doubt, NetGhost. You told me, you did say, I'm going to send you a stock, but you're probably not going to like it. You were correct. So I will give you the benefit of the doubt. At least you knew. All right. So right now you're just stuck. You're just stuck right here. And you can see that you're just stuck between all these major moving averages. So it's a rough go for you. The volume is incredibly volatile. So with Taiwan Semiconductors, it's not surprising with what we're seeing in today's world. Yeah, it's gonna be something. HB has been trading is for everyone. If you can't handle the swings, maybe a value investor. Yeah, you know what? Somebody made a comment in the Bid and Ask Nation yesterday, and they said I finally recovered on my Apple trade that we exited. I don't know, a month ago, 6 weeks ago. If that's how you're gonna look at this, it ain't for you. Go somewhere else. Don't blame me. Blame yourself, because you have the stomach of a child. OHI. What do you... I'm not reading that one. OHI. Let's do that one. OHI. Ooh, what do we got here? Nice little climb that we have running through here. Good volume coming in for... Okay, this is not bad. So it's early. It's early still, but this is looking pretty decent. Let this thing move into the sweet spot. I like it. Whoever brought this up, I like it. And if you're swinging this, if you can get a pop over the 25-day or the 50-day moving average and stay up here, it's looking pretty good, man. Keep watching this one. Now, be careful. I mean, even if you get over the 50, you're still going to be in the overbought area up here, and it's going to be what am I trying to say here? It's a risk-on trade. So, of course, this thing has a very high probability of dropping down. So just make sure you're using stops with that thing, no doubt. I'm not saying that it's a grand slam, but it's looking pretty decent. How do you see from that bar graph that volume is volatile? Oh, good question. So you just notice here, you know what, I'm going to pull up Taiwan Semiconductors again, because I think that's the one I said it about. All right, you notice how over the past, so this is mid-August. So you can see that you've had these big spikes in volume, and every single day you're getting up, down, up, down, up, down, up, down, up, down, up, down. This is volatile volume. There's no consensus. If you look at a company like, let's see, I think Apple right now is having it's still not the best. Let me see if I can zoom out enough. When I run into a stock that has good consistent volume, I'll tell you. It's hard to find these days, but I'll tell you. What is that noise? Oh, Siri is talking to me. BBY? Best Buy. Best Buy. Guys, smash the like button. Let's get this bad boy to 200. Okay, with Best Buy. I'm writing this down. This is a great looking stock coming from a long-term perspective. We'll see if we can catch it, but I love that we've closed over the 200-day moving average. This is wonderful. This is wonderful. Consistent volume for about 5 days. Yesterday it fell off a little bit, which is no surprise. You got that little pullback. You're starting to roll a little bit here, but what I like is that this is what I like most. Yeah. So keep a watch on this one from a long-term perspective. I'm just zooming out to see if there's any. You're sitting at very big resistance points. Yeah, this is going to be a tough trade. It's going to be a tough trade. It's looking good, but it's going to be a tough trade. Let's see. IBM. Let's see IBM, and then let's look at everybody's favorite, Alibaba. All right. IBM is getting hammered pre-market. Oh, wow. They are getting hammered. So that sucks. With IBM, they drop below all 4 major moving averages. That blows. Was it earnings? Is this earnings? I think red means today. Earnings and revenue. So they missed on both. All right. Well, that's what you get. So here's my advice to you for today. Don't touch it. Don't touch it. Let it settle down. It's going to be okay. See what happens tomorrow. Probably more likely see what happens on Monday, and everything will be okay. Let's see here. Alibaba opening at 176.90. God, this is insane. So we're starting to roll up here. This just means that the daily trend is turning down on us. We got a big day of selling volume yesterday. I can definitely see this as being a lot of people are maybe going to take profits here because $135, $140 to $180 in 10 days, that's pretty sweet. So I could see a lot of people taking profits. We're getting some kind of climb here, but it's going to take a lot. It's going to take a lot more to get this baby going. But Alibaba, keep watching it, guys. What do you think of TradingView compared to others? You know what, Keith? I actually really like TradingView. I'm not going to lie. It's not perfect, and it's not my favorite platform I've ever traded on, but I do like it a lot. I think it's very good. I think it integrates a lot of things. More importantly, it's free 99. Okay, so you were holding a support area here, and you can tell that because you're just consolidating right in the middle of it. So Kraft Heinz, dog stock, if you want to, what is this, $37 stock? Throw a tracker share on this bad boy, and just let it run. And oh boy, you have 100 and 200. 100 is about to drop below the 200, which is a pretty bearish signal. Not that I really focus on that, but it is a bearish signal. So this could make this stochastic not continue this climb that I was talking about. In my opinion, I would not be trading this right now, especially when our earnings the 27th. So next week, next Wednesday, Thursday, something like that. Why do you look at the stochastic so differently on the right versus the left? What a great question. So this stochastic right here, this is my daily stochastic. This tracks every single day's movement. So you can tell that it moves a lot more. Let's put this in, where can I put this? Let's put this in 3 months, and let's put this in 3 months. There we go. There we go. So these are the same thing, and you can see that over this 3-month period, this has been like nothing, just smooth on the bottom. And this one has been up, down, up, down, up, down. It's because this tracks the daily movement. This tracks the weekly movement. This is my overall trend. Also on this chart, I have volume and I have moving average. So it just gives me a lot more detail. This is for my long-term trades. This is what I'm going to be in for a stock for a couple of months, hopefully. This is just a couple of days. So that's a great question. What's your favorite platform? Yes, my favorite platform is Schwab. And it's only because I have every single platform there is, including Webull, including Robinhood, and I prefer Schwab the best out of all of them. Okay, what's their names? Tesla is down right now pre-market, which, listen, guys, they crushed on earnings. Everything was good on earnings, and here we are down $10 a share right off the rip. So that's just how it goes sometimes. That's why I don't trade earnings. But with that being said, no reason to panic. Let it calm down. Let's see what's going to happen over the next few days. If you notice, you had really low volume for the past 2 weeks, basically, because I think that everybody was probably waiting for earnings to happen. So just let this one settle down. If you want to go and day trade it today, have a ball. But otherwise, nah. Schwab is baller. Do I ever day trade on earnings? Murphy, yes, I do. I do. I day trade on earnings. I have no problem doing that. What else do we have? What else do we have? Did we already talk about Intel earnings? I think Intel reports after the bell today. Yep, Intel's after the bell today, so we're not doing that. Boston Beer, let's see. They've been really beaten down. Oh, Sam, that's right. Okay, where is this company located? That's my main question. Sam. Just give me a second here. I just want to see if we have... Interesting. I thought they were based in Boston, obviously, but the interesting thing about this is these gaps all over the place. Something's not adding up here. Something's not adding up here. I can't do anything with this right now. Let me know if you guys are seeing the same issue there, please. AZO, it's an expensive one, but expensive one price-wise. This is doing the same thing. Is there something wrong with TradingView right now where I'm getting these weird... No, I guess not. Let's refresh here. All right, no, this is it. So, all right, with this... Oh... That's what it was. Sam. I got it. I hate when it does that. What it does is up here, if you switch months, if you switch down here months, this always defaults to 1 hour. That's exactly. So that was giving me 1 hour candles for 3 months. But as you can see with Sam, it's a dog stock. It's on the bottom. I would say throw a tracker share on it, but it's over $500 a share. That's up to you. If you're a playa, you can go ahead and do that. But what I would do is just wait until this thing pops up and be very patient with it. Even on this side, we're doing 1 hour again. Even on this side, God, this is annoying. Even over here, yeah. You know what, guys? Don't do anything with this right now. Plus, earnings are today. I'm assuming after hours. So, next, don't forget to smash the like button. Thank you. PayPal. Let's do PayPal and then let's do Pinterest. PYPL. All right, PayPal. So PayPal, rumor has it that they're going to acquire Pinterest. Usually, on a typical basis, and this makes sense, the acquirer drops in price because they're taking on all the risk. The acquired company, or who's going to get acquired, goes up in price because they're getting bought. What do they have to risk? So the stock market's now open. So PayPal's down here. I'm sure Pinterest is up there. Don't touch PayPal right now. Just let everything settle down. If you want to day trade it, go for it. Pinterest. Yeah, they had a big spike yesterday, and they obviously still couldn't get through their 100-day moving average. So they're going to get bought for, I think, 45 million? 45 billion? I have no idea. Whatever it is. I think it's 45. So I think I'm sure it's probably 45 billion. So I still think that Pinterest is going to fill this gap. I think they still have a move to the top side coming up, but we'll see. I don't know. We'll see. So I'll do one more stock, and then I'm going to get out of here. Let's see. WDC, Skynet. I use a different platform and it doesn't look weird. That's the reason it was looking weird. Let's see here. PayPal. It would be an all stock transaction, so PayPal would get diluted. Oh, Jeff, thank you. I did not know that. I didn't read the story at all. I just saw this morning that it was going to happen at some point. Kramer was telling people to buy PayPal. Shocker. Give me a good stock. J&J. That's kind of weak, but I'll do it. J&J. Dinosaur here, but so these ones are hard to trade because let's zoom out. This one might be COVID might have given it. So let's zoom out here. Yeah, whatever. I'll just do it. So right now I'm looking at this saying what I want to happen. You guys know what I want to happen. I want this thing to move towards the sweet spot. I just need volume coming in. We're getting that. They obviously reported good earnings the other day. From a swing trade perspective, if you want to try to run this up to the 200-day moving average, you can, but I would be more comfortable getting that over the 200-day moving average and going from there. So, all right, that's it for today, guys. We have a long day of recording coming up. 2 p.m. live stream today. Subscribers only. Everything Money subscribers only. If you're not subscribed, subscribe. Last Thursday's episode was epic. You don't want to miss it. Also, book club tomorrow morning. Chapters 8, 9, 10. I'll put it in the Discord. I can't remember. And then I think 8, 9, 10, 11, something like that. Chapter 8's only 2 pages. And then that's it. So I'll see you guys tomorrow right here. If I don't see you this afternoon, you guys have a wonderful day. Peace out.
Thank you.